Hi everyone, welcome back to channel name. Today we're diving into REMAX Holdings, ticker RMAX, a global real estate franchise giant. With its stock price hovering around $89, could it soar to $1,000? We'll break down its strengths, weaknesses, competitors, profit margins, debts, dividends, risks, and long-term outlook up to 2050. Plus, how does it stack up against the S&P 500 and other indices? If you're into stocks or real estate, hit that like button and subscribe. Let's get started. REMAX, founded in 1973, operates a franchise model with 145,000 agents across 110-plus countries. It generates 70% of its revenue from recurring franchise fees, making it a cash flow machine. But $1,000 per share? Highly unlikely. Analysts peg 2025 targets at $9.75 on average, with a low of just 13 cents. Even by 2030, optimistic forecasts reach only $46.50. Real estate is cyclical. High interest rates crush housing demand, and short-term projections show a potential 78% drop. Long-term growth looks cautious, tied to market recovery. What makes REMAX strong? It's got a globally recognized brand and high agent productivity, 11.9 deals per agent compared to competitors' 5.3. Its maximum commission model lets agents keep up to 95% of earnings, driving loyalty. Weaknesses? High franchise fees cause agent turnover, and it's vulnerable to housing market slumps. Opportunities include tech investments like REMAX University, while threats come from iBuyers and regulatory changes. Compared to rivals like Keller Williams and Coldwell Banker, REMAX leads in per-agent volume but lags in profit-sharing appeal. Its net profit margin is 2.8%, up from 1.7% in 2022, with yearly changes of 0 to 2%, stable but not explosive. Financially, REMAX is solid for its sector. Adjusted EBITDA margins range from 25% to 32%, showing operational efficiency. It carries about $450 million in debt, but strong free cash flow, covering 95% of EBIT, means it can handle obligations easily. Side incomes like Motto Mortgage and tech platforms like Wemlo contribute 5 to 10% to revenue, adding balance sheet stability. Since its 2013 IPO, which raised $220 million, the stock peaked at $67 in 2017, but has lost 60% for investors, hitting lows recently. Dividends? REMAX paid 23 cents per share quarterly until 2023, but they're now suspended due to losses. It's far from a dividend aristocrat, needing 25 years of consistent increases. Short-term returns are rough, trailing the S&P 500's 15% annual gains. Long-term expect 5 to 7% returns compared to SP's 10% or Nasdaq's 12%. Risks include political factors like rate hikes or recessions, which could cut revenue by 10 to 15%. Social trends like urbanization help, but regulations hurt. On the upside, lower rates could spark a housing boom. Looking ahead, REMAX is betting on tech and sustainability. By 2030, expect AI-driven tools and Motto Mortgage expansion. By 2040 to 2050, plans include EV infrastructure integration and growth in Asia and Africa, with stock prices potentially hitting $73 by 2040 and $220 by 2050 in a bull case. Compared to global indices like MSCI World's 8% long-term returns, REMAX underperforms. It's a steady cash flow play, but for total returns, diversify with broader market ETFs. REMAX is resilient, but not a moonshot. If dividends resume, it could be a hold for income investors. Otherwise, the S&P 500 offers better growth. What's your take? Buy, sell, or hold? Drop it in the comments. Check the description for sources and more. Thanks for watching, and we'll see you in the next one.